Welcome to the Snapshot edition of the Daily Video Update. This is being prepared Friday, April 8th, where we'll briefly discuss the action in the market today and then see how things look for Monday, April 11th. And it was kind of a disappointing day. We saw a good rebound on Thursday, and for things to turn back more positive, we needed to see follow through on Friday, and we just didn't see that. So from that regard, it was kind of disappointing. In another aspect, we've now entered into a trendless or sideways type of an environment where some of you that like to do credit spreads or iron condors or more market neutral type of strategies, even though you won't bring in as much because volatility is dropping slightly, they tend to be safer because some of these credit strategies can have a very lopsided risk to reward ratio. So let's go back and talk about Friday. We did have a gap lower right at the open, and there was some initial selling. We didn't really hit any of the pivot points on Friday. We just kind of went down a little bit, stopped, built a base, and then went back up, hit a top, came back down, and so forth. As the day went on, there was an attempt at a rebound. Prices actually went positive, but after they shot up, they just kind of drifted sideways to lower, and eventually we re-entered negative territory. So that is not showing really any kind of strength. That's just letting things fade after seeing a bit of an advance. We ended up closing down 2.7%, not a real big move. Volume was back to being below average, which is kind of strange for a Friday. Our technicals are still turning more negative, even though we have a few of our indicators that are looking a little more positive and looking a little bit, they're showing some improvement. We're still battling between inflation and interest rate concerns. And that's really kind of what's driving the market right now. If interest rates go up, we're seeing tech stocks really go down. And then, of course, all the different geopolitical concerns, the inverted yield curves. We've seen a few of the inverted yield curves actually go back positive now. And then the ongoing debate back and forth about oil. And then that's what people really feel when they go to fill up their car or try to heat their home, that and food prices. The debate continues to go back and forth with that. So what are some comments that we can make about Friday? The technicals are still weakening, but a few of them are showing some improvement. Like with the new highs and new lows, we saw a lot of new highs generated, but not necessarily by the big growth or tech stocks. We saw more of the value stocks really hit some new highs. Even though we had a decline on Friday, the rising interest rates are having an impact on stocks. And so that's kind of, at least in the short term, and this can go on for a while, but that's really the relationship that we need to watch right now. Some of the yield curves are starting to re-invert, I guess, or go back to normal. One negative thing is that we closed below the 200-day simple moving average, a little bit above, a little bit below. And then one thing that really stood out is the Dow Transport Index. It's been very weak. It had a bad week last week, and it had an even worse week this week. And that has a lot to do with the supply chain issues, with the rising cost of oil. And that really can hamper those products that need to be sent from one place to another place. But one thing that is interesting, and I have a chart that I'll show, is that sentiment is not really dropping. We're still kind of in the neutral midpoint area. People aren't really freaking out, nor are they getting really optimistic about things. The economic report that came out showed that wholesale inventories did increase. And if you think about it, that shows more of a slowdown with the economy. A company will make products, and instead of sending them out to be sold, they have to keep them and store them for a while, and then they get chalked up as inventories. So that could suggest some economic weakness. The current market valuation is not updated yet. It won't until we get further into the weekend. But we're currently at fairly valued. And a lot of that can be attributed to the fact that they're using the 10-year to the 3-month yield curve. And that's been holding up fairly well. So it's making things look a little bit better, where if you used a different yield curve, you would get some different results with that. As far as our trend, we are now trendless. We've dropped below 20 and it's declining. With the down day and kind of the last down few days that we've seen, even the up days weren't exactly positive. The bias is now negative, and I'm keeping the momentum as negative as well. And then this is the fear and greed index, where if we were really starting to get fearful, we would see things really shift over to the right. If we were getting very positive, we would see things shift over, to the left. And then we would see things shift over to the right if we were really going up pretty furious. But there was really no change from Thursday to Friday. It didn't move. Looking at our bar chart, you notice here that the high that we hit on Friday was also Thursday's high. We were not able to get above that. In fact, we were just a little bit below that, and nor did we exceed Thursday's low. So in some ways, you could call that an inside day. But we're right in this area where we have a lot of resistance. Can we stay above the pivot? That's kind of the next line. There's also some moving averages that may be acting as support if we start to go further down. And then if you look at the volume here, you see where it really dropped off. It was well below average on Friday. Here's our moving average spaghetti tree, where we're just kind of in the middle of this whole mess right now. And that just shows a real indecisive market. One day we're above the 200, the next day we're below it. And that's kind of the line in the sand between positive and negative. In our rainbow, we're kind of dropping back down into the middle of the rainbow right now. We are below the 200-day simple moving average. As of Friday's close, it calculated at 44.92, and we closed at 44.88. So just a little bit below, but still below it. Then this is for some of you that aren't familiar with Dow theory, usually it involves looking at the Dow itself and then comparing it with the transports. And you want to see them moving with each other, especially when they're going up. If the Dow is going back and hitting all-time highs, you want to see the transports also hitting new highs at about the same time, and vice versa. I tend to also include the utilities, which have really been performing well. But the middle chart here with the transports just shows the real weakness that we've seen with oil prices and supply chain concerns. And then the dollar's been holding up well. So this is a weekly chart of the dollar. On Friday, we were actually able to get a little bit above 100 for a while, but we ended up closing just below it, 99.75. So that's actually hanging in there. And some people are attributing that for weakness in stocks, because as the value of the dollar goes up, the exchange rate is not as favorable, and that's sometimes seen as negative. However, on the other hand, having a good solid currency also means more confidence in the US dollar. And it may fall apart at some point, but for right now, it still seems to be hanging in there. And then here's our mishmash of all the different yields. Some of these are inverted, but they're all going higher overall. And even down here with the 3-month, it saw an advance on Friday. So what's our outlook for Monday? Our technicals, we're mixed with kind of more of a negative slant right now. We really needed to see follow through on Friday that we saw on Thursday, and that just did not happen. So some of our indicators are negative, others are weakening, and there's a couple along the way that are showing some improvement. We're still stuck in that intermediate term range. There's this daily back and forth battle between growth and value. We have some yield curve concerns, even though a couple of them actually switch back and are more normal now. The issues with oil and the oil reserves. Do we try to lower prices a little bit? What's that going to do to things in the future? And on Monday, there's really no economic reports that are coming out. And then all the different geopolitical events that could change and become the focus at any time, especially between Russia and Ukraine. And then they're still having the lockdowns in China, which may feed into the supply chain issues that are already happening, which could also have an impact on the US economy. And then the yield curves, are they going to stay at the point where they're looking more normal now? because just because they went inverted and came out of being inverted doesn't mean they can't go back and be inverted again. And then the other ongoing oil issues. So what are our different scenarios? To go down from here, first of all, what really made things struggle in the past week were rising interest rates. If you see rates going up, that tends to feed over into tech stocks and growth stocks and drive them lower, as well as the yield curve concerns. And that's kind of ongoing right now. So that's a very viable scenario. Now, if you see them go the other way, if you see interest rates drop, that could come over into our positive category. But right now, given how things are playing out, it's really more of a negative currently. The internals in the market and some of the broader indexes like the Dow, the mid caps, small caps, the NYSE, the Wilshire, they're showing some weakness as well. And then the technicals are also weakening. There was no follow through to the buying that we saw on Thursday. It just didn't happen on Friday. Now, what can make the market go up from here? We still have this positive backdrop. And if you look at the yield curve chart that I have, where I show all the different yield curves, and if you look at when they went inverted, and then what happened after they stopped being inverted and went back to more normal looking charts, what did stocks do after that? And a lot of times we see a short-term surge in stock prices. Well, could that be what ends up happening? Well, first we have to get out of this inverted environment and then see if stocks have the ability to thrust higher. Our oscillators, some are still positive, but pretty much all of them are starting to show some weakness. Others have already turned negative, where we have things like the new highs and new lows showing a little bit of improvement. And then since we're in the middle of this whole spaghetti moving average tree, they may provide support at some times, and if we start to go up, they may be providing resistance. The third scenario, this is where we're at right now. This is what is playing out. The ADX has dropped below 20 and continues to decline. So that means that we're in a choppy sideways market where we might see a slowdown in price movement. If price movement really picks up, then the ADX will pick that up and eventually go back above 20. But we can stay in that kind of an environment for a while. So what's our conclusion? The S&P is weakening and turning negative. It's still slightly positive because the long-term moving average is not rolled over, but it's looking weaker in the short term. So we're mixed to negative. I should have put negative on here with a little bit of improvement coming along in some of our indicators. Intermediate term, it's also positive, but showing some weakness. Some of our oscillators are positive, some of them are weakening, with some of them actually turning negative. And then the whole support and resistance that may be provided through the different moving averages that we plot, not just in the S&P, but also in other indexes as well. Long term, we've switched back more to negative because we closed below the 200 simple moving average. Then here's just a shot of the different videos. As I record this is the daily snapshot video. I've already recorded the full length daily video. So please, if you want some more information, feel free to go check that out. Over the weekend, I will prepare the weekly video. I just don't have a chance to be able to do the monthly videos right now. So thank you very much. Have a great weekend. And I will prepare the next video after Monday's session, and I'll be doing the weekly video over the weekend.